Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm happy to join you on this Friday, January 6th. Happy New Year, everybody. All right, for today, before I get into my 5 charts that I want to show you, I do want to make sure everyone is aware that we have our biggest event of the year tomorrow morning, Saturday, January 7th. It all starts at 9 a.m. Eastern. Market Vision 2023. This is our annual event. It's our 4th annual. Last 3 years, the predictions, the forecast that I've given, really strong, almost spot on. I think I've got a pretty good idea of what's going to happen in 2023. And I've got 3 of my best friends and colleagues from StockCharts joining me. Dave Keller, who you probably know from the Final Bar. He's on every afternoon after the market closes. Then we've got Julius de Kempenaar. Of course, he's the founder and creator of the RRG charts, which shows the rotation in the markets, the asset classes, sectors, etc., quite visually. And then Grayson Rose. Grayson Rose, I go back a long time with Grayson. When I first started doing shows here at StockCharts, Grayson was my host. Really very bright. He also one of the more organized individuals that I know as far as approaching stock market. So you really want to join us tomorrow morning. We're going to have a great event. Go over to earningsbeats, plural, both plural.com. Get to the homepage, click on this Market Vision 2023 link, and all it takes is a name and email address. We will give you the room instructions so that you can come in and join us tomorrow. Again, completely free, no credit card required. We'd love to have you. And then you can scroll down, you get a little bit more information about the event, what we're going to be talking about, our bios and so forth. Anyway, hope you can join us. All right, so let's get into our charts for today. I'll tell you right now, when I use technical analysis, I use it to manage risk. Some use it and think, okay, it's a guarantee, or, this is what the market's going to do based. I don't really look at it that way. I mean, I'm hoping that it does what I think it's going to do, but it helps me manage risk. It tells me when to take more chances, when not to take chances, when to be out of the market, when to be shorting, when to be long. That's what I use technical analysis for. It's to help me manage my risk. When I look at the VIX right now, it's telling me that the market, more likely than not, wants to go higher, the stock market. And let me show you why. This is a chart of the Volatility Index. Then I've got the S&P 500 below it. And then in the final panel here on the bottom is the correlation between the VIX and the S&P 500. The thing that you've got to understand is that normally when the S&P goes up, VIX goes down. When the S&P goes down, VIX goes up. So what you expect on the correlation is for the line to be down here near -1, or at least, down here between minus 0.75 and -1, because they tend to go directly opposite one another. So they are quite inversely correlated. When you have to be careful is when they actually start to break into positive correlation territory, because what that's starting to tell you is that as the market goes up, so is fear. That tells you to be cautious. If fear is going up while the market's going up, if you hit any kind of a bump in the road, the market can take a big hit. Same goes for when the market's going down and the VIX is going down, because that's telling us when the market's going down, we normally see the fear going up. Well, if the market's going down and fear is coming out of the market, a lot of times you'll get that big reversal. The market's not nervous. So in this case, you get any positive news whatsoever, you get a big bounce to the upside. So as you look at this, I've just highlighted the times when we've crossed the zero line, going back all the way back into 2019. And here was one where we crossed. We were going up on the S&P. We were going down the VIX. Then look at the VIX. This is a 5-day moving average. So this is a lagging indicator. Look at the VIX turning up while the S&P was going up. Next thing you know, we had VIX coming back down. But look at the market. Market took a pretty big drop. Early 2020, we saw the same thing start to set up. Now, it wasn't a huge drop. The drop came, a month and a half later, and I'm not looking for that. I'm looking for something a little bit, closer to the signal. But we really didn't do much. Maybe, went up a little bit and then back down. So I think that signal was okay. Look at September of 2020. Here we got the S&P going up. The VIX was coming down. And then look at that 5-day moving average start to turn up. That was one of the biggest drops during 2020. I wrote about this over at StockCharts. Look at this, September 3rd, 2020. The VIX, when you start to see this positive correlation, you've got to be really careful. And so what happened? Well, if we click on this, you'll see what happened. It was the worst period during this massive advance. It was the worst period we had, and this VIX gave us the signal. So you do have to be very careful and at least understand what some of these signals are telling you. Anyway, I've got all these marked, and you can kind of see where we are now. The correlation has gone positive here to open 2023. And what's interesting is as you go down, each time the S&P goes down, look at the VIX spike. The VIX spike. You go down, the VIX spikes. We're going down right now, and the VIX is actually just kind of flat. It's not really doing much. And so as a result, I think this is a situation where we could see a short-term spike in the S&P 500. So that's what I'd be looking for. My next chart is just simply the VXN, which is the volatility index of the Nasdaq 100. And I've got the Nasdaq 100 down below and then the correlation. And you'll see similar, situations. Normally you're down here in this minus 0.75 to -1 range. But when you start to move higher, you have to at least recognize that, hey, this is kind of odd. We want to be, we want to understand what these signals can mean. And even though we're not quite to the zero level in 2023, you can see this doesn't happen very often when we get these spikes. And what's happening right now is the Nasdaq 100 is going down, but yet we're staying flat here on the VXN. Here we're going down straight up on the VXN. Here we're going down straight up on the VXN, going down straight up. What's going on? Fear is coming out of the market as the major indices move lower. And that can be, not a guarantee. Please don't misunderstand me here. It's about managing risk. If you're in short positions and you're thinking, okay, maybe I want to kind of be a little bit more careful, let me show you my next chart. Why it's important to be careful, especially with the Nasdaq. Look at this. We are right at neckline support, or we were this morning at 260. So we're at a support level where we could get a bounce. And as I look at this chart, I see a downtrend. And I, when we're in an uptrend, I talk sometimes about an inverse head and shoulders, and that's a bullish continuation pattern where you're going up, you pull back, here, instead of what we're doing here, you would go up, you'd pull back into a left shoulder, you'd go up and set the left side of the neckline, go down to a lower low, put in an inverse head, go back up to the neckline, inverse right shoulder, and then boom, you break out. That confirms a move to the upside. Here we have the opposite. We're going down, left shoulder, neckline, head. I didn't even mark that on here, but that's the head, like a triple-headed head. Back down exactly to this neckline. Potentially, with what the VIX and the VXN are telling us, this could establish a short-term pop. Not necessarily a long-term pop, but this could take us up a significant amount, maybe 5, 6, 7% to establish a right shoulder, which could be up over the 280 level. And I'm just saying this is a growing possibility based on this signal, not a guarantee. And then if it does break down, I would be worried if this neckline breaks. So that would not be a good sign for the bulls, but it hasn't broken yet. And with the VIX and the VXN signaling what they want or what they are, you want to be careful there. Two more charts. Number one, the XLV. I really like healthcare here. The pullback right to the 50-day moving average, right down to about the area that we broke out recently. Look at the double top here. If we make this breakout, that would be very bullish for the XLV. And if I go down here, number one, AD line remains very, very strong. Even through all of this weakness and chop, you can see that AD line just kept going higher. I think there's accumulation taking place in the XLV, and a breakout above 141 would be very strong. Look at the biotechs. This is a part of the healthcare. Look at that downtrend, perfectly connecting these highs. We broke out above it. Just recently, we took out that recent high in August, and now we've pulled back. We're testing that area. This is an area where I think the biotechs could make a run. And then my last chart I have for you, Aerospace. Aerospace has been weak on a relative basis. You can see the tumble that we had back in 2020 during the pandemic. We had a reaction high on a relative basis to this level, but you can see on a relative basis, we could not get through 0.41 until now. As we, at the end of 2022 and into the early part of 2023, we are getting a nice relative breakout. This is the best the aerospace has performed relative to the S&P 500 since all the way back in March of 2020. So we're now talking about almost 3 years, finally making a big move on a relative basis. On an absolute basis, watch this level just below 1,700. We are on the verge. A breakout here. I've been talking a lot recently about Boeing. I think Boeing is a pretty good stock for 2023 because it is showing leadership in the aerospace group, and the aerospace group is showing leadership versus the S&P. Leading stock in a leading industry group. That's what we look for at earningsbeats.com. All right, again, I really just want to thank everybody. I love doing these shows, trying to, work with everyone on, just trying to keep everybody informed on all the different signals because the market is complicated. It's very difficult. And if I can help in some way, it's great to do so. So anyway, it was a pleasure joining you today on Your Daily 5. I just want to make sure that you remember to go to earningsbeats.com, sign up for our free virtual event, Market Vision 2023. It starts tomorrow morning, Saturday morning at 9 a.m. Again, Dave Keller, Julius DeKempenaar, Grayson Rose, all from StockCharts are joining me. We're going to give you our take on the market. I'll give you my forecast for 2023, absolutely free. Go to earningsbeats.com, click on that register now button, and it'll bring you to this page. Put in your name and email address. It's that simple. We'll send you room instructions. So I certainly hope you'll take me up on that. You do need to register with your name and email address, but there's no credit card required. Again, it is completely free, and it all starts at 9 a.m. Saturday morning. I hope to see you there. Happy trading, everybody.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.